Okay, so picture this. Your child has a little bit of investment income. Maybe a grandparent gave them some stock, right? Tax time rolls around and you spot this IRS option that looks like a total lifesaver. You can just add their income to your return. No extra paperwork, no separate filing. Sounds great, doesn't it? A simple, convenient shortcut. But what if that convenience is actually a really, really clever disguise? And that right there is the big question we're tackling today. We're going to put IRS Form 8814, it's called the parent's election, we're going to put it right under the microscope. Is this thing a genuine time saver, or is it a financial trap designed to cost you way more than the hour you save on paperwork? Now, the other way to do this is to file a separate return for your kid using Form 8615. Just keep that number in the back of your head because it's going to be important. Yeah, and this is exactly why we need to dig into this. I mean, check out this quote from our source material. It calls this form a Trojan horse that triggers a cascade of liabilities and erodes family wealth. Whoa, that's some pretty intense language, right? It tells us that this isn't just about picking a form, it's a major strategic decision. So let's get into it. Let's start our forensic audit. All right, first things first, before we even talk about the dangers lurking inside this so-called Trojan horse, we've got to figure out who's even allowed to use it. Who does the IRS let through the front gate? And you'll see the rules for Form 8814 are super narrow. Think of them like a series of security checkpoints you absolutely have to pass. So here they are, the three big gates you got to get through. First up is the age gate. Pretty simple. Your child has to be under 19 or under 24 if they're a full-time student. Okay, easy enough. Gate number 2 is the source gate. And listen up, because this one's a big deal. Their income has to be only from interest and dividends. That's it, nothing else. And finally, you've got the ceiling gate. For 2025, their total gross income has to be less than $13,500. If you fail even one of these checks, boom, the shortcut's off the table. So what does only interest and dividends actually mean in the real world? Well, here are the hard stops. Did your kid have a summer job and earn even a single dollar? Sorry, you're out. Did they sell some stock or crypto and have a capital gain? Nope, you're out. Get any income from a partnership or a trust on a K-1? You guessed it, you're out. The rules here are ironclad. And trust me, that little summer job trap, that's the one that gets almost everybody. Okay, so let's say you actually made it through all those gates. You checked all the boxes, you're eligible. Now the fun begins. We get to peel back the first layer of this Trojan horse and see what's inside. And right up front, there's an immediate penalty, what our source calls a voluntary penalty. This is the price of admission, the cost you pay right away for that convenience. Now, to really get this, you have to understand something called the Kiddie Tax. For 2025, it breaks down like this. A kid's unearned income is chopped into 3 tiers. The first $1,350, totally tax-free. That's their standard deduction. Anything over $2,700, bam, that gets taxed at your highest tax rate. But it's that little slice in the middle, Tier 2, the money between those two numbers, that's the critical zone. That's where the trap is set. And here's the crazy part. Look at this. If your child's income in that critical middle tier comes from qualified dividends, and let's be real, that's super common, and you file their own separate return with Form 8615, that income is taxed at 0%. Zilch, nada. But if you pick the convenient Form 8814, the law forces you to pay a 10% tax on the very same money. You are literally choosing to pay tax that you do not legally owe. It's wild. So let's just do the math. You're paying 10% on up to $1,350 of income that should have been tax-free. That's a straight-up penalty of $135. Now, maybe $135 doesn't sound like a fortune, but why would you just give it away? It's a completely avoidable tax. It's like leaving cash on the table for no reason at all. And believe it or not, the hits just keep on coming. The problem with Form 8814 is that there's literally no place, no box to check, no line to fill out to claim certain deductions for your child. A really clear example is the additional standard deduction for a child who is blind. For 2025, that's almost $2,000. But if you use Form 8814, that deduction just poof, it vanishes into thin air, gone. And that means more of their income gets taxed unnecessarily. Okay, so that $135 penalty, the lost deductions, that was just the warm-up act. The real danger, the truly scary part of this Trojan horse, is how it leaks out and infects your own tax return. This is what our source material calls the AGI Contagion effect. And believe me, this is where the small problem becomes a massive cascading financial disaster. So, we need a quick primer on AGI, or Adjusted Gross Income. This isn't just some random number on your tax return. It is the number. Think of it as the master key the IRS uses for everything. It decides what deductions you can take, what credits you qualify for, basically everything. And here's the rule. The higher your AGI, the more of those good things get taken away from you. So how does Form 8814 poison this all-important number? It's actually shockingly direct. It takes all of your child's income above that $2,700 threshold, and it just dumps it onto your tax return, right on Schedule 1, Line 8Z. From there, it flows right into your total income, pumping up your AGI. You've basically just infected your own finances with your child's income, and the side effects are not pretty. This chart shows exactly how that works. It's a total deduction demolition. Let's take medical expenses. You can only deduct the amount that's over 7.5% of your AGI. So when you artificially inflate your AGI with your kid's income, that floor gets higher. All of a sudden, you need way more medical bills just to get the same tax break. And it doesn't stop there. A higher AGI can kill your student loan interest deduction, block you from contributing to a Roth IRA, and wipe out education credits. It's a domino effect.
But honestly, this right here might be the most devastating consequence of them all. College financial aid. That pumped up AGI number from your tax return, that is the exact number you have to report on the FAFSA. This can absolutely crush your chances for need-based aid. We're talking about things like the Pell Grant, which is a huge deal for many families. Just let that sink in. A simple choice you made to save an hour on your taxes could end up costing you literally thousands of dollars in college funding. It's insane.
Okay, we've seen the direct costs. We've uncovered the hidden AGI contagion. So now it all comes down to the final choice. This is the moment where you have to think like a strategist. Let's put these two options, the Form 8414 shortcut and the separate return, side by side in a head-to-head battle. This chart makes it pretty darn clear. Let's just run down the list. Tax on those qualified dividends, Form 8814 costs you 10%. A separate return costs you 0. The winner is obvious. What about your AGI? Form 8814 inflates it and puts you at risk. A separate return keeps it safe. Again, no contest. Financial aid risk? High with 8814, basically 0 with a separate return. The only category where Form 8814 has an edge is that it's a little less complex. That's it. So, after all that, the verdict is in. And it's not even close. For almost every single family out there, choosing the parent's election is just a bad move. Filing a separate return for your child using Form 8615 is, without a doubt, the superior wealth defense strategy. It saves you from paying taxes you don't owe, and, more importantly, it shields you from all those dangerous side effects of an inflated AGI. Which really brings us back to one final simple question. When you really weigh it all out, that tiny bit of convenience versus all the massive financial risks, the guaranteed penalties, the deductions that just disappear, and the truly scary impact on college aid, you really have to ask yourself, is saving maybe an hour of paperwork worth risking thousands of dollars? Once you see the whole picture, the answer's almost always a resounding no.